Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 4 o'clock in New York, Election Day, November the 8th, 2016, and this is the Daily Report for Gold and Silver. We do have a mixed bag in the precious metals markets, with gold trading slightly lower on the day and silver trading fractionally higher on the day. Of course, we have seen premium come out of gold ever since the election race, and we'll see the outcome in under, 12, 13 hours. But ever since the perception that Hillary Clinton had pretty much locked up the nomination, would be elected as our next president of the United States, we've seen gold prices really tumble from their recent highs. We're currently looking at COMEX gold, $12.7550, puts it off about $3.90 on the day. The low has been $12.7330 and the high $12.9150. Over to COMEX silver. COMEX silver, as you can see, is trading up about 18 cents on the day, or a percent gain at 18.33, with a low of 18.17 and a high of 18.73. Obviously, that in sympathy with the equities markets, which did stage a moderate rally today. And besides being a safe haven investment, of course, silver is heavily used as an industrial metal, and that could be the rationale behind why we're seeing silver trend higher and gold trend lower. Over to spot. Spot, we're down about $6, $12.7495. That's when we look at gold. And then when we look at silver, that's trading up about 16 cents at 18.33. Let's take a look at our first chart. So to me, the key to this most recent move in gold, in which we've seen it really move up from about 1242 to 1308 and then come back down to its current area of 1276, is twofold. First, have we sustained long-term chart damage? We'll have to look at our weekly chart to kind of uncover that. And secondly, this market is obviously falling. Where can we look to find potential support? And that's the first thing that I do want to tackle on today's report. So to do that, to that end, we've got a couple of different fib retracements that we have added into this. One is going from simply 1200 all the way up to these yearly highs at 1380. We have another fib retracement, which just accounts for this last rally, starting at 1242, going up to 1308. And then we have a longer one, which accounts from the yearly low to the yearly high. And really, when we look at that, there's only a couple of levels that we actually want to focus upon. But here's what's interesting. Right now, when you consider the most recent rally we have seen in the marketplace, in which, let me go ahead and change my color here, but in which we've seen this market run from 1242 up to 1308. When we calculate different retracement levels, the 50% retracement level takes us to 1275. Market is at 1276. And so this is a potential point for us to find some sort of support. However, we have a harmonics, and harmonics typically will give us the greatest insight in the market. And a harmonics is simply where you have two different Fibonacci retracement sequences, or different time cycles. This one from this longer move here, just line this up properly, and then this one, of course, from this shorter move here. And what happens, most interestingly enough, is our harmonics occurs because you get a 61% retracement here, and the 61% retracement is really from both of these two different charts that we're looking at, or not charts, but different time sequences and different price points. So for that particular reason, I believe that if the market cannot find support in this particular price point, meaning a 1275, you really could easily see this market go to about 1266, 1267. That's not that far down, and the level really behind that one is 1257, and that is a 78% retracement of this smaller move here. But as I said, traders, the fact that we have a harmonics right here, I think that this is where, if we do see further weakness in the market, I think that we should be safe to enter the market from the long side if this level holds, which is roughly at 1265 to 1267. So lastly, I do want to take a look at silver. Now, silver was up today, and it was up over 1%. And that's not what I am so drawn to looking at as much as the high that it hit today. Take a look at this. We are looking at a daily chart, absolutely a shooting star. That is the candlestick type that we're identifying. Traders push this market up substantially higher. The high 1873. You can see that right here, but that could not be sustained. The market did come down. It did close higher than the open, one. So it is a green candle. And secondly, at no time did it really go into what I believe is now going to form a support line. As long as this market is staying above this particular trend line, I think we could see higher pricing in silver. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.